feel like this COVID-19 pandemic has brought a different story each week to the markets. Obviously, huge volatility. And we've been running stories the last couple of days about hedge funds snapping up the top talent. What's been your experience in the last couple of months?
Well, I think this is actually a great moment for hedge funds. Not that the pandemic's a good thing, but it is the opportunity for hedge funds to truly differentiate themselves. Because 2019, a lot of those returns were obfuscated by the fact that the market was up 30% for funds that ran correlated to the market. And this year, there are a lot of hedge funds that are really doing their job. There's, of course, the multi-managers, which continue to produce consistent, uncorrelated returns to the market. There are funds that are correlated, like Alkeon, Cadian, Coatue, Melvin, Maple Lane, Jericho, Orbimed, that have also done a great job. There are a number of macro funds that have really come back swinging after a tough spate. The last 2 years were good. This year is great. Brevin, Moore, Caxton, Rocco's continues to do a great job. Element. So, I think that this is, and then there are funds that really continue to not do well, unfortunately. And we look at the composite of these funds over time. And again, if you go back from sort of 2015 to date, you do see a trend. Those that have managed their gross and their nets and managed volatility well over the last 5 years continue to do well, and those that haven't continue to not. I'm not going to name them, but there's a whole group in that category as well. And I think LPs have tremendous clarity this year in terms of who is a true alpha differentiator.
Right, and of course, as I said, each week the story seems to change, and in May some of the gains were already being given up by some platforms. I'm hearing that perhaps equity platforms haven't done so well this week in particular. Does it happen, within days that someone's book gets cut, for example, and that they're out the door, Ilana? What's been your experience even just this week alone?
I think it's a misnomer that life is short-lived. I think it really depends upon, it depends upon the platform. There are some platforms which have very clear lines in the sand in terms of when capital is cut and when you're out. That going in, and some investment professionals like to have that clarity. And then there are others where it's more of a conversation. And candidly, I know of plenty of examples in the latter category where people have even started off. It's not like there's a legacy of having done well for years. They've started off and not done well, but because they're sticking to the correct risk parameters and their portfolios constructed in a way which is pari passu with how they're supposed to be set up, the founder has a lot of patience for them, and they've lived through a tough cycle and continue to go on and do well. So that is an untruth that I am happy to debunk.
Ilana, what about flows? I mean, typically you would imagine that the funds that are performing poorly, you see flows out, and the funds performing well, flows in. It's not always the case with hedge funds and alternatives because there might be a different timeline for investors. But what exactly are you seeing flows-wise?
I actually think we're going to start to see flows back into the industry. There was last quarter, there was, I saw data that it was unfortunately, the eighth consecutive quarter of net outflows to the industry. And I've mentioned this before to you, Vonnie, to put a fine point on it. Last year, there was $100 billion of net outflows, and in 2018, there was $37 billion. So the trend has not been good. The absolute amount has not been good for the last 2 years because the returns have not been there for the most part. But now that a lot of, particularly the hedge funds that I mentioned, as well as others, have proven that they can manage volatility in this environment. Let's sort of take a step back and think about this environment. I think of this as like the great equalizer for hedge funds, because none of us have a playbook for COVID-19, right? We even doctors don't understand this disease. And when we have a market that can move 5 to 10% a day, depending upon whether we think we're making progress on a vaccine, for hedge fund managers to prove that they can manage through that volatility and do well. And also, I think LPs are in a place now where they no longer believe we're in a market that's just going to continue to go up. And so being hedged is probably a good thing. I think we're going to see flows start to go back into the industry. So that's sort of the hedge fund industry as it stands, my assessment. But there's other things as well that I think feed into that. The private equity industry, I think, is going through a tough time because a lot of these capital calls now are not being used to play offense. They're not being used to invest in new companies, new stuff that's going to generate great returns, but rather to plug holes and play defense and fix busted companies. That's not that exciting for an LP. So unless it's a private equity fund that's sitting on top of a lot of dry powder and can now deploy at attractive valuations, that's not a great place to be. And then, of course, there are strategies like distressed. You guys did a big article about that today, which, is we're gearing up for the next big distress cycle. That's the bright spot, I guess, from the environment that we're in from an investment standpoint. And you see one hedge fund after another raising capital to take advantage of those opportunities, which, again, I think will be another source of flows into the industry.
Right, exactly. Almost waiting for the next shoe to drop there. We had sort of a bright spot for distress, then the Fed stepped in, and as you say, lots of dry powder and new funds getting started as well, in order to take advantage of what might be a moment. Bankruptcies just, roiling the marketplace at the moment. So just on that note, Ilana, I mean, do you anticipate that would be an area where, if you could get good fast at distress, that would be a place where managers will pay up? And what about new managers? Will there be an interest from LPs in newer managers here?
Well, definitely distressed is interesting right now. I also think private credit, before I move on to other asset classes, private credit is going to continue to be interesting. We've seen that trend for the past, I'd say, really since the crisis, for the past 10 years, as banks have had to go balance sheet light, credit risk has gone from banks to hedge funds. And what's good about private credit is it's less episodic than distressed, right? Distressed, it's only at certain moments in time that it's interesting. Private credit, you can invest through the cycle because you're lending to performing companies. They may have hair or complexity, but they're performing. And I think we're going to see a lot of funds that are looking to grow that business, whether they're in it today or they're not. And if they're in it, from 30 to 50 to 100. But what's going to be interesting there is you can't really grow at that scale just by hiring people. And I think that funds that have in their DNA the understanding of how to leverage data and technology and apply that public, do that in the public space and now think about how to apply that in the private space will build an alpha generating platform there. So those are areas I think are interesting. And then newer managers, look, so long as they come from a fund, I think two things are important. One, that they come from a fund where LPs see the provenance of where they're coming from attractive. There's a reason that all these alumni, that have come out of, for example, Citadel in the last year, in the last few years, have scaled out of the gate. Mike Rockefeller and Carl Croker, that's Woodline, have done an amazing job. They launched just August of last year with $2.5 billion. I think they'll be $5 billion by year end because they are delivering exactly what they promised, which is 1% return a month to LPs, and they're doing it in this environment. So that's important. And also that the person be seen as the person, right? That LPs are making the bet that this is somebody who is a full-fledged PM, and coming from a multi-manager, that transition is more seamless in the eyes of LPs than coming from a single manager fund where they have to hope that the guy or gal can be as successful without the overlay of the founder helping them figure out what they should be in or not.